Sometimes you wonder when you check the stock market and the price of a stock has gone way higher than the last time you saw it. Or maybe it has dropped a lot worse and the dip is indeed getting deeper. What happens? What drives the market? Why does these things happen? Is it magic or witchcraft? Today we're going to be discussing further on why the market changes, because it's important to know the metrics that cause these changes. When you're informed, it would help you to make the right choices for your market, the right choices for your investment. So stay tuned. Hi, I'm Sylvia, your money gist partner, and I usually show up here to help you understand the money game in plain English. Okay, we're learning together, growing this journey together, and I'm rooting for you because it can only get better for you from here. Have you joined our riddles? Have you answered our riddles yet? If you've not, please look for them and give me the answer to the next one. I want to see your name on the comments. Well done to everyone who has. It's been an amazing series and I'm loving it all the way. Alright, so let's discuss this. You know how they say in Igbo that oratoboto ekobi eku. When something is nice and is beautiful and people admire and like it, the rush will be there. That's why usually when you notice that someone has started, like say pure water business, everybody starting up a pure water business. When someone or two people starts going into higher purchase, everybody just starts going into higher purchase. I know there was a time that it was gas business, so everywhere on your street you have like 2 or 3 spots where they sell and refill gas. Why? Because the demand is a lot. People are looking out for it, people are interested in it. The more market, more ask for it. I once heard of a market strategy that new product owners use. So when there is like a new product in the market, they would hire marketers, but this time around the marketers are supposed to go into the shops in a particular area, say Computer Village or Alaba Market for instance, right? So when they go there, they would start they'll go into different shops and start asking the shop owners for that particular product, right? Like this, they would raise like a market urgency, a market need. It will give an impression that consumers and customers are asking for this product, and then it will make the stock owners start looking for that product to buy it and put in their stores, especially when it is related to something that they usually sell. So it's all about supply and demand. So in simple terms, stock prices move because of supply and demand. When a lot of people are asking for a particular stock, it's going to send some signals to the market and say, hey, I need this product, I need this report. Then it now makes it look like it's very valuable, and then the prices will now start going up. So supply and demand causes stock prices to grow. Why would the demand suddenly go up? Why would people suddenly start asking for a price, start asking for a stock? There are various reasons that can cause that, for it to go up or for people to just automatically lose interest in a particular stock. So why indeed will people want to buy or people want to sell, that is to dump their stock? There are different reasons that can cause this. It could be company news, it could be economic or global event, it could be a new product launch from the business. It could really be anything, but there are key drivers that influence this. One reason I would speak about is the company performance, right? So people are interested to know how a company is doing. If you have been doing good for a while and the numbers, everybody's searching and they have positive reviews, people are speaking about a company in a particular way, they love it, the reviews are looking good, the product is serving very well, people love it, people are doing analysis, and the company performance is really, really looking good. It's a positive remark. And that's the thing, because people are always watching, they're always checking. Investors are always checking for their money. What's going on with their money? They want to know, did you pay dividends? Were you paying dividends initially and you just stopped paying dividends? Were you not paying dividends and you started paying dividends? Or were you paying a particular amount and now you've paid higher than the last time, or you've paid lower consistently for the last 3 quarters? So people are always checking to see how your company is doing, to know if they should continue with you, with that company, with that particular stock or not. So when I talk about company, just know that I'm also referring to their stock, because of course their stock is a part of the company. like Zenith Bank announces profits, people are interested to buy. For instance, when GTCO was listed on the London Stock Exchange, share price went up, right? A lot of people were asking about it, a lot of people were buying from it, were buying it, a lot of people were just interested, and it was the trend was really on the GTCO at that point. And of course, people are going to buy. When you have negative information, bad reports, losses, you're declaring, a company keeps declaring losses over and over again, people are going to pull their money because they're going to lose some form of hope that they already have in that business. With this, the stock price is going to go down. The best clue really is to check the stock report, check the earnings report. It's going to give you an idea of how the stock has performed over time. The second one is the state of the economy. So if the economy is doing well at that point, and also a particular area of that economy, a particular sector, say the tech sector of that economy is doing very well, people will be interested to buy. There will be a lot of inflow and a lot of cash movements that would help and influence people to buy. But if you have things like a new government is coming in, there's election drama, or maybe there is war going on, for instance, when there was the global fight, the Russia and Ukraine wars, it affected a lot of things. So globally and locally, the economy is also a big driver of the stock market. Number 3, sometimes it's just the trend and hype. People will just be saying buy the market. When you have like the big whales, it happens a lot in the crypto space. I remember then that when you have the big whales come and speak about a particular coin, you have a lot of people, because they already have big following, massive following. So those people that are subscribed to them would start paying to get that stock, will start paying to get that crypto, and then it's going to now influence the market to tilt in that direction. So sometimes it's not really the news, because I was even asking a friend of mine what exactly is driving that stock market that has been growing very well these days. Sometimes it's just the news. People are buying the trend, people are buying what people are talking about at the particular time. So, and that's why it's important to stay informed, to get the right information, so that you would not go and make a mistake. Because for instance, people are talking about a stock because they want to sell it out in a few months, and then you already just going to X and seeing that a particular stock price is going up, or a particular company is being spoken about, then you will not go in to read about the news or to understand why exactly the stock is trending. You just go ahead and buy the stock on your own. So please, as much as possible, check the news. FOMO is real. Don't use because of fear of missing out and go and buy a stock that is already very high, and don't use because of fear of missing out and actually miss out when you should. So please stay on the trend, stay on the information, get the right information, make your own research, and know what we are talking about. Generally, lessons that we just need to learn is watch the company news, stay glued to company news. Secondly, get updated on regulatory and government policies, because this also affects the stock, it affects the economy as well. So stay informed and know what regulators are talking about and what the government is talking about, whether it's a local government or like in a global space. Know what the policies that drive that industry is speaking about at that point. And thirdly, what is the customer numbers? What are their performance like over the past quarter, over 2 quarters? What has their performance been like? So you need to also check these things out. Do you track what moves the prices? How do you stay informed? It's important to, number 1, follow the right sources, the right channel. So you can follow news updates on Nigerian Stock Exchange. You can follow Yahoo Finance, Google Finance. Just go online and follow the right sources that will give you information on the go. Number 2, you can use applications like Bloomberg or CNBC for global trends. You can also use apps like Bamboo, Optimus. They would give you information. They have like an information sector where you get news that is ongoing, like updated news on what's going on in the stock market generally. Check the earnings report of that company. They usually come in quarterly, but do check the earnings report. Check the earnings report, because from there you understand the health of the company. If they are doing well, if they've declared losses, how much losses to profit have they declared. It will just help you understand the health status of the company. And lastly, knowledge is power. So just go for knowledge, stay connected. Information is a key driver in the market space. You need to know what is happening per time. So stay connected and get the right knowledge, and I'm sure you'll be very fine. I've gotten this question that should we care about fluctuations in market? And I would say that if you're not a day trader, then there's really no need, because it's going to smoothen out over time if it's a good company share. So you cannot keep, just know what your risk appetite is, and then run with it. You don't want to, if you have a very, very low risk appetite, you don't want to go about investing in high risk ratios, in high risk stocks, because you're just going to have high blood pressure, and you don't want that for yourself. So just, if you are not a day trader, day traders are usually very interested in the volatility, because they go in and come out of the market with like swiftly. They don't stay for long terms. But if you're there for a long term, these things would always smoothen out. From the time stock market began till now, there has been like good profits if you look at it over time. But if you're looking at it on a day-to-day basis, sometimes it can be very, very discouraging. So especially when the stock is a very good one, you don't need to care so much about fluctuations. That's why it's also important that you put some money out, some money that you're not ready to use in a long time. Really, in a long time, you don't need to put in a lot of money. Just make it consistent, and then make it something that you can actually put and let grow. Imagine sowing a seed, a perennial crop that will take some years before it grows, and when it finally grows, you have the seeds and the fruit coming over time and consistently. So it's just important that you treat it like that as well. So what are other things that you think drive the stock market? I would like to know. I would like to learn from you. So let me know in the comment section. Hope you have subscribed. Have you subscribed at this point? If no, please just take a minute to give me a subscribe, give me a like, and drop me a comment. I'll be there to listen and respond to you. Definitely. Definitely. So you say it's not fluke, it's not magic. There are actually things that you can use to understand the stock market and what's going on. So go ahead and learn from this, make your own decisions, and let's get better in this stock tracking business. Until then, I'm Sylvia, and I cannot wait to see you in my next video. I'm still here cheering on you and loving up on you as well. Thank you, and I'll see you in my next one. Bye.